Welcome to Furniture Industry News for November 4th, 2024. Today we're bringing you updates on some major developments in the furniture industry, including the closure of American Freight stores, new insights into how consumers are shopping for furniture, and the latest performance metrics from across the industry. In a significant development for the furniture retail sector, American Freight is closing all its stores nationwide following parent company Franchise Group's Chapter 11 bankruptcy filing. Store closing sales began on November 5th, marking the end of another major furniture retailer's operations. The company cited ongoing challenges from sustained inflation and broader economic difficulties in the durable goods sector as key factors in this decision. Franchise Group has reached a restructuring agreement with holders of about 80% of its first lien debt and secured $250 million in financing to maintain operations across its other businesses, including Pet Supplies Plus, The Vitamin Shoppe, and Buddy's Home Furnishings. This closure follows a troubling pattern in the furniture retail space, coming after the recent Chapter 11 filings of other notable retailers. American Freight's exit represents another significant shift in the retail furniture landscape, impacting countless employees and leaving a gap in the market, particularly in the value-focused segment of the industry. New research reveals fascinating trends in how consumers are shopping for furniture these days. While nearly half of shoppers still prefer the traditional in-store experience, we're seeing significant growth in online furniture purchases, especially for specific categories. Bedroom sets, office furniture, and lighting products are leading the shift to digital shopping. What's driving this online movement? Better prices are the biggest draw, with 27% of consumers citing this as their main reason for shopping online. Free delivery is another major factor, mentioned by 25% of shoppers. The convenience of a wider product selection and faster shopping experience are also key motivators. Interestingly, furniture shoppers are more likely to rely on online reviews than buyers in other retail categories, with 31% checking reviews before making a purchase. They're also social shoppers. More than a third frequently shop with family or friends, and about 1 in 5 say their shopping companions greatly influence their decisions. When it comes to specific items, mattresses have been the most popular purchase over the past year, followed by lighting and bedroom sets. The data shows that households with children, Generation Z, and city dwellers are significantly more likely to buy furniture than other demographic groups. The latest industry data shows some concerning trends in furniture orders, with August seeing a 7% drop compared to last year. This follows a pattern of declining orders we've seen in recent months, including drops of 5% in July and 6% in June. While the year started strong enough to keep overall orders slightly ahead of 2023, the margin has narrowed to just 1%. Looking at shipments, August numbers were down 10% compared to last year, though they did show a 14% improvement from July. Year-to-date shipments are tracking 8% below 2023 levels. Backlogs have also decreased, showing a 10% reduction from last August and a 5% drop from July. There is some encouraging news from the recent High Point market, where companies with strong designer customer bases are performing notably better than those focused primarily on retail. Industry experts are carefully optimistic, suggesting we could see a return to more normal market conditions by the middle of 2025. However, the path to recovery likely depends on improvements in the housing market. Industry analysts note that increased housing inventory and activity will be crucial factors in driving a full industry recovery. Companies have already taken steps to adjust to current conditions, with inventory and staffing levels now better aligned with current operations. Some positive news from the retail sector shows encouraging foot traffic trends in the third quarter. Home goods emerged as the clear leader, recording an impressive 8.1% increase in store visits between July and September. Costco wasn't far behind, with their foot traffic growing by 7.2% during the same period, continuing their strong performance throughout the year. What's particularly noteworthy about Costco's performance is their consistency. They've managed to achieve positive year-over-year growth in foot traffic every single month since the start of 2024. Even during January's challenging weather conditions that affected retail nationwide, Costco still saw visits increase by 5.2%. Several other major retailers also showed healthy gains in store traffic. BJ's Wholesale saw visits increase by 5.9%, while TJ Maxx and Marshall's both recorded gains above 5%. The major discount retailers Target and Walmart saw more modest increases, with foot traffic up just 1% and 0.9% respectively. These numbers suggest that while consumers might be more selective in their spending, they're still actively shopping, particularly at value-oriented retailers. The strong performance of HomeGoods and Costco indicates that consumers are especially drawn to retailers offering competitive prices and diverse product selections. In the e-commerce space, Wayfair is showing remarkable resilience despite ongoing industry headwinds. The company continues to capture market share through strategic improvements, even as many traditional furniture retailers face challenges. Their success stems from a focused approach on price optimization, enhanced logistics, and an improved digital shopping experience across their websites and mobile apps. Looking at their third quarter performance, while total revenue did see a slight decline of 2% compared to last year, there are several bright spots in their results. The average order value increased by 4.4% to $310, showing customers are spending more per purchase. The company has also launched a new subscription-based rewards program, offering 5% back on purchases and free shipping to boost customer loyalty. Wayfair's leadership remains optimistic about their position in the market, noting they've consistently gained market share every quarter since late 2022. Their strategy of reducing operational costs over the past 2 years has positioned them well for when the furniture category rebounds. This approach, combined with their enhanced customer experience initiatives, suggests they're building a stronger foundation for future growth despite current market challenges. Thanks for listening to today's edition of Furniture Industry News. To ensure you never miss our latest updates on industry trends, market analysis, and breaking developments in the furniture sector, be sure to subscribe to our podcast wherever you get your shows. We're committed to keeping furniture professionals like you informed with the news that matters most to your business.